Welcome back. You're watching us here on Halftime Report on CNBC-TV18. In an otherwise wobbly market, one of the stocks which is surging ahead is CCL Products. It's a solid set of numbers that the company has reported, a 15% growth in their revenue, a much higher jump in their profitability and EBITDA as well. So let's get chatting with the management. Challa, Srishant joins in for a quick update on these numbers, but more importantly, the outlook for the year going ahead as well. Challa, first up, before we get chatting about the volume growth target and EBITDA per kg numbers, coffee prices, they've surged world over. Now, they don't impact your margins immediately because you have a cost-plus model. The coffee prices don't look like they're coming down in a hurry. In that, what could the impact be on client behavior, your incremental capacity utilization and domestic branded business? What are your thoughts?
So what we have seen is that most of the customers, they've started migrating from a long-term contract. Usually we have customers who are doing 2 years, 3 years contracts as well when the prices were stable. They've started bringing that down to 6 months to 1 year. So that is one significant impact. And as far as the coffee prices are concerned, yes, things have been volatile. But Brazil has actually been investing a lot in increasing the coffee throughput. So, in fact, this is one of the first years the crop is going to be coming in the next week or two. So we'll know how the flow is going to be in the next 3-4 days, actually. And that will give us clarity about how the prices are going to move going forward. So we're expecting that there could be a correction if the crop is good.
So what does this do to your incremental capacity utilization? Because you've laid out a fair amount of capacity, and if the contract cycles are shortening, then is there a case that you might have capacity which you may not be able to fill?
So that is the beauty of our business. If you look at it historically, irrespective of the coffee prices, we've been able to fill our volumes. So we keep adding new customers every year, and that's what we've been doing over the past years, and we're still continuing to do that now also. So irrespective of whether the prices go up or down, we're confident that our volume guidance will still continue, and we will continue to keep growing forward as well.
So if you could just expand a little bit in terms of the volume guidance, if you could just break up what you did this quarter, what you closed the year with, and what you are targeting for FY26 based on the pricing scenario.
So this whole year, we had given a guidance of around a 10% volume growth, and we are more or less around that range. But going forward, we are actually looking at maybe a 10 to 20% volume growth for the current financial year.
So you're expecting as much as a 10 to 20% volume growth in FY26?
Yes.
Okay, so that range is quite wide. If you could just tell us what's it predicated on?
So one of the main reasons is because we are getting orders again on a back-to-back basis with shorter lead times. It's a little difficult for us to predict the way we used to predict earlier. If you recall, in the last couple of years, we actually used to give a guidance which was very accurate with a much narrower number. That was because of the long-term contracts that we used to get in place before the start of the financial year. So now, since we don't have that in place, we're keeping this range, a wider range at this point in time.
All right. What about, a couple of things. One, in the very near term, what is the EBITDA per kg target that you have for FY26? What was it in FY25? Because I remember the third quarter was 114 rupees. And over the next 5 to 10 years, as you increase your capacity, as you increase your footprint, what is your market share aspiration? Your global market share is still 7 to 8% itself, and India as well is 3 to 4% on the B2C side. What's your aspiration here? So very near-term EBITDA per kg and long-term market share.
So EBITDA per kg has moved up from that 114 to around 120, 125 range. And again, this is because of the product mix changes, new products that we are launching. So all these things have contributed positively. And we're also adding a lot of end customers that is helping us with this growth. We are hoping that we can continue with the similar EBITDA per kg going forward as well. And as far as the market share is concerned, yes, we are at about 7%, but with the volumes that we are growing year on year, we are hoping that within the next couple of years, we should be crossing that 10% mark as well.
Okay. If you could just highlight what might be the biggest variable that you see going into FY26 or the biggest headwind that you're probably bracing for, what would it be?
To be frank, our company has withstood almost everything, let it be from COVID to war situations, recession, you name it, tariffs, unpredictable tariffs, terrorist attacks, whatever it is. So whatever the circumstances are, we've always seen that because of our presence in India and Vietnam, we have an added advantage of being flexible. So even if there's an issue in one country, we have the ability to transition production to another country. So we're quite confident that whatever comes, we will be able to face it head on.
Everyone, no matter what happens, everyone needs their cup of coffee regularly, globally, I guess. So that keeps you resilient. Challa, you spoke about the global business. Let's talk about India, because your domestic business, you did have a target of 300 crores in FY25. Wonder whether you crossed that or not. And you still have 65 to 70% sales coming in from South India. You reach about 120,000 stores. What's your prognosis here? At what pace are you likely to expand here? What is the target here in terms of reach, in terms of revenue, non-South portfolio? What's the aspiration?
So yes, we did cross our 300 crores. In fact, the interesting part is for this year, it's our 30th year. We crossed 3,000 crores as a top line for the whole company. We crossed 300 crores in the bottom line, and we crossed 300 crores for the branded business as well. So number 3 seems to have a lot of significance for us in this year. And the domestic sale was actually around 450 crores. The brand was crossing 300 crores. And going forward also, we are expecting about a 40% top line growth in the domestic market for this year.
Wow, that's fantastic. 40% domestic growth. Just what did you do in the year gone by? What did you close at?
We had done about 450 crores.
Okay, all right. So just wanted to also narrow down on the balance sheet. You have debt of around 2,000 odd crores, if I'm not mistaken, as of the last quarter. So give us a sense in terms of where your gross debt stands. Yeah. How much of it is working capital? What is the plan to reduce it in FY26, considering that you're quite bullish in terms of your P&L?
So actually, we had projected that we should end between 2,000 to 2,200 crores, but we actually ended much lower. Around 1,800 crores is what we actually ended the year with. We had focused, we had done a little bit of renegotiation with some of our customers also for earlier payments. So all these things helped reduce the debt for us. And going forward, yes, there is a volume growth. So we are expecting a slight increase in the working capital. The term loans, we have about 700 to 800 crores of term loan, which is there, which we are going to repay within the next 3 years, and then we'll be debt free. It's only going to be the working capital that is part of our regular business.
All right. And final question. What about the FMCG subsidiary that you have? What's the update here? You were dabbling in various categories. Is it still at planning stage? How much of that has been executed? What are the near-term targets here?
So the FMCG business has actually been merged with the parent company, and that's the update which I had mentioned about the 300 crores of branded business and 450 crores of overall sales within India. The subsidiary company right now, there's a kiosk vertical that is there, which we are still in the initial stages over there.
So no other categories that you're seeding, because earlier the story was that the FMCG vertical sits in a separate house. Thereafter, there could be perhaps some sort of value unlocking there.
Yes,
so reaches a certain scale.
There will be some new product there will be some new product launches in the next couple of months itself. So all that is sitting actually in the parent company itself. The vertical that we hyped off, that has only the kiosk business at this point in time.
Take that point, Challa. Thank you so much for joining in and giving us all those updates. It's number 3, which is lucky for you. Hopefully, as the years go along, those numbers keep increasing for you as well. 14% higher on the stock. And we have, the management giving a strong outlook for the next year. 10 to 20% volume growth, a wide range because of the variables. But the EBITDA crosses 120 per kg all of next year. Take a short break, come back. We also, after our daily dose of coffee, get our daily dose of pharma. Vishal Manchanda, who's the analyst at Systematics, joins in to discuss the pharma sector.